here's a contrarian take for you. April's probably going to be great for the cryptocurrency markets, but we need to start back in history. See, way back in 1912, George Charles Selden dropped a truth bomb in his book, Psychology of the Stock Market. It says, markets aren't just numbers, but they're a wild dance of human emotions. After years of studying the stock market, Selden figured out that investor vibes from fear to FOMO drive prices more than we'd like to admit. It's all just other people on the other side of those numbers, guys. Fast forward to 2025, and guess what? The same bullshit still runs the show. Stick around for the next few minutes because I want to dive into a bit of the psychological phenomena, but also why I believe that the best days of the market are still ahead of us, and that April, particularly April 2nd, could be the kickoff date for, well, the next round of fireworks. So look, the psychological roller coaster we go on, it's important to understand because you can ride the wave if you hit it at the right time. So let's talk tariffs, because that's the talk of the town these days. A potential bull run could start on April 2nd. The psyops happening in the traditional market right now also apply to crypto because we are victims of what happens in the stock market, for good, better, and for worse. Look, very simple. Fear tanks the markets. Greed fuels pumps. Emotions like panic and euphoria can override fundamentals, and it just really doesn't care if you have a PhD in chart analysis. When the herd FOMOs or freaks out, that drives the market. The reason why a bull flag suddenly becomes your worst nightmare can be because of the crowd. Now, if you've been in crypto or have been trading for a while, you might have heard that trading is 90% psychology and 10% skills. You might have also heard this very famous quote from Warren Buffett that the stock market is a device for transferring money from the impatient over to the patient. With that being said, let's take a look at what the heck is happening to the market right now. What exactly is fueling the fear? And what's making the bounce back a likely scenario to watch out for? And of course, it's the Donald's favorite word, tariffs, best word in the English dictionary, favorite word, best word. Look, this is probably the thing that Trump is really staking a lot of his presidency on right now. And it's his favorite word, as he says. Well, most economists and analysts are fearing these tariffs are going to drive inflation back up. The ultimate question is if it'll all be good or bad. No other founding fathers, Alexander Hamilton, actually argued that it would make American industry productive and competitive. In contrast, a recent study from the University of California, Davis, found that from 1870 to 1909, tariffs actually made U.S. businesses weaker, not stronger. Tariffs reduced the average size of businesses as well, while also increasing the price of what they produced. Because tariffs work the same way they did 100 years ago. The concept hasn't changed very much. Now, these findings, therefore, have relevance today. Now, of course, we could argue all day on which side is right and whether this is a big negotiating tactic from Donald Trump, just coming in and asking for wild things, and he'll get something in the middle, and deals will be made, and I'll be fine. But there's no denying that tariffs are making a lot of people anxious, businesses, investors in particular, freaking the F out. According to the University of Michigan's latest consumer survey released this month, consumer sentiment fell 11% to a reading of 57.9, down from the previous month's reading of 64.7, and reaching its lowest level since November 2022, which, by the way, in case we're in here then, basically the absolute stone-cold bottom of the market. Contrarian indicator? Potentially. A stark contrast, of course, from December recently when the sentiment rose after Trump's election win. Now, Bank of America's latest global fund manager survey of 171 different participants conducted in March showed the biggest monthly dump in investor allocation to U.S. equities on record, with the allocation dropping 40% month over month, again, basically seeing a bear market low coming in. Wild how fast everything moved. The fear drove people crazy, man. Now, before we get into the big key concepts driving the fear here, look, if you're trading crypto, you need a great exchange to do it on. You got to check out what the guys over at BitUnix are doing. They've got a crazy deal on right now as well. But before we get into that, just you need to know what BitUnix is. This is one of the exchanges where you can long and short all the big coins in the market. So look, whether you want to trade Bitcoin, Ethereum, Solana, Dogecoin, whatever, they got you covered. And no KYC, no VPN, no bullshit. Basically, click the link down below and you're in. And you can start trading. Doesn't matter where you are in the world, you can use it. Okay? Go check it out. It's a great exchange. I've been using it for a lot of my trading recently. They have great liquidity, large range of coins you can trade. And when you use that link down below, exclusively, you're going to get all kinds of cool bonuses, including a $10 sign-up bonus. You can use as free money to try out the exchange. 20% deposit bonus, meaning you'll get $200 back if you put in $1,000, and up to $2,000 in trading bonuses. So go check it out if you're a trader and looking for a great place to be doing your trading. Thank you very much. So let's break down this concept of driving the fear, hard anchoring. And no, I didn't make this word up, nor is it some kind of effed up fetish. So what is it? Well, hard anchoring, as defined in behavioral finance, is when investors latch on to an initial piece of information, like a big tariff announcement. Oh my gosh, it's gonna be terrible. And then they use that as the reference point for all their decisions moving forward. Even if it's not the full picture, even if their initial understanding was incorrect and all this kind of stuff, they just anchor to that initial reaction. That explains the bias and how it leads investors to overemphasize the first numbers that they hear, skewing their perception of reality. In the context of tariffs, hard anchoring happened when Trump announced his reciprocal tariffs coming, of course, on April 2nd. There's been a lot of tariffs already coming. People have already freaked out. But maybe a lot of the damage is already done, and the market's kind of starting to absorb it and say, actually, maybe it's not that big of a deal. Now, investors fixated on the worst case scenario out of all this, say a blanket 20% tariff on all imports. So we start dialing down from there, from the worst to probably reality. They don't wait for details like which sectors will be affected. Will there be any remedies? Will there be any negotiations? Will there be deals? They just react, assuming a full-blown trade war is coming and it's going to lead to the new Great Depression. Every time something happens in the market, new Great Depression, it's all over. Now, this plays into investor psychology in a very big way because when you hear tariffs, investors anchor on the idea of skyrocketing costs, collapsing supply chains, countries retaliating. Look, this is not the Don's first rodeo here, okay? He's had a trade war before. Now, during his first term, he raised the average tax on U.S. imports from 1.4% to 2.7%, which are relatively cute numbers when compared to the current tariff discussions. However, the effect wasn't so cute. The S&P 500 suffered a drawdown of 19.8% in 2018 as the market mulled over Trump's agenda. Right now, we're seeing a lot of negative sentiment. A lot of fear that the stock market's going to drop even farther. If the stock markets do drop farther, watch out below for your crypto coins, right? But a lot of negative sentiment here stemming from this present tariff conversation. Again, hard anchoring, aka being glued to the worst case scenario like it's a bad roller coaster ride. Has the market doing hard ups and hard downs. Countries start playing diplomat, though, trying to sweet talk the USA into softer deals. Think like the EU's begging for a hall pass. Canada's pulling up to like, yo, but we're besties, and we got like great maple syrup. We should do a deal, guys. Mexico's just saying, yeah, whatever, man. Let's make a deal. We'll make it work. It'll be fine. Well, these ping pong talks go back and forth. The market loves being an effed up drama queen, doesn't it? Gosh darn. Swinging up, swinging down, throwing tantrums. It's all over. We're so back. Every 5 minutes, it seems. But this is where the smart money, where the cool-headed whales swoop in, place their bets, while everyone else is losing their minds. They buy up a bunch of assets and make millions, billions more. But hold up, after all the panic, we'll hear that countries cave to the Don's alpha mog energy. Who can stand up to the Don? Nobody can resist Trump's big boss vibe, and everyone's just going to do what he says eventually, because he holds all the cards. He's the president of America. Maybe he just hits the pause button on some of these tariffs, like a true deal maker, or makes a deal that makes everything not so bad. Again, from the anchor bias where everything was really, really terrible to like, oh, that's actually way more reasonable. Are you seeing the pattern? Some folks are going to say, oh, but it's a market manipulation. Yeah, maybe, But real talk, whether it's a conspiracy or not, investors who can't keep their emotions in check tend to get in trouble. Patient ones, they chill, they win. But why do I think April 2nd is not the end of markets, but actually the beginning of the next leg up in the bull run? I could be wrong. I'm frequently wrong. That's part of investing. But some experts believe that we are looking at it the wrong way. Take, for example, FundStrat's Tom Lee. He believes that there is a positive scenario to the impending implementation of reciprocal tariffs on April 2nd. Here's what he said. Markets will bottom or have historically bottomed before the event actually happens, right? Because everybody starts front running what they think is going to happen at the event, and therefore they start repositioning before it happens. He gave the 1962 Cuban Missile Crisis as a good example. It was a 12-day crisis where the world was literally on the brink of nuclear Armageddon. Oh, you think tariffs are bad? Nuclear Armageddon's worse, guys, okay? Come on. The stock market bottomed 7 days into that crisis and recovered 2/3 of the losses before the resolution. The people who bought the bottom, when everybody thought literally the world was going to literally end, did well. Again, this proves that the market anchors itself to the worst case scenario, literal nuclear Armageddon, and then other investors come in and say, shit, we're all going to die anyway, might as well buy some stocks. Bloomberg has also reported that the tariffs might be narrower than initially feared. Probably going to be the case. It's probably not going to be as bad as Ray thinks it is, which could, of course, then ease some of the market's anxiety because, again, everyone's anchored to the worst possible scenario, nuclear Armageddon, tariff-wise. And when we get something less than that, it'll probably be a relief for the markets. Now, if the scope of tariffs is indeed limited, it might reduce the potential economic disruption. Probably inflation's not going to be the kind of problem that everyone thinks it's going to be, especially with gas prices falling as much as they have. And of course, then we can have a more optimistic outlook for investors going into the rest of Q4. I mean, Howard Lutnick, the Commerce Secretary, is out here saying like, yo, guys, Q4 is going to be like nuts. Hold on, okay? Come on. And what about this? What is something that a lot of countries just, what if they come out and just all lower the damn tariffs? And they just say, you know what, screw it, we'll lower tariffs. Fine, we'll match your tariffs, it'll be good. And it actually works. And things end up being nowhere near as bad as the media wants you to believe that it's going to be. Trump himself has said there's going to be flexibility on reciprocal tariffs. Still a lot of headline risk, obviously, because of Donald Trump and what he tweets out. It's like, oh, hey, nice green candles there. But shame if I tweeted about some tariffs again, wouldn't it? But look, just imagine if after all the bad stuff has been priced in and all of a sudden the tariffs end up being a bit watered down or it's just simply not as bad as predicted, the market's probably going to like it. Because again, everyone's anchored in nuclear Armageddon. And we're probably not going to have that happen. Now, aside from the possible flexibility of the tariffs, other things we see lining up as well. And I know I've got all Lark's doing the thing again where he's beating the dead horse, talking about all the global M2 and stuff. Yeah, look, the global M2 is wildly important. It's literally the rising tide that lifts all boats, and it's like flooding in at the moment, okay? Then we have tax cuts coming, which could be wildly bullish for U.S. markets. We have OPEC pumping out the oil in April, okay? That's going to bring gas prices down even more. It's going to bring inflation down even more. It all comes together, okay? Fed's probably going to lower interest rates in May, probably June at the latest, which in turn makes it cheaper for businesses to expand, cheaper for people to buy houses finally, and it's all good for risk assets. So a big hooray for Bitcoin and our dog coins, right? Again, this is all speculation. I don't have a crystal ball, and there's a lot of uncertainty between now and then, and markets don't like uncertainty, but investing is never a certain thing. Most people only come in when they think it's a certain bet, and that's buying the damn top, which is the riskiest time to buy, man. Look, unless we end up having some kind of black swan event or I don't know, Trump just goes full nuclear mode and just says, screw it, bajillion% tax on everyone for tariffs. A lot of good things are shaping up for April right now, from the M2 to reduction of tariff fears and all the rest of it. Now look, if you've been patiently waiting with your crypto bags, underwater, feeling the pain, you're not alone, okay? But we might just have a few more weeks to go before, well, things start looking not so bad again. Till then, just chillax. Thanks for watching.